Good morning, traders. It is 8 a.m. Chicago time on Monday, the 29th of June, 2015. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The news, as you probably already know, overnight is circling around Greece. No There's been no improvement in the situation there. Markets try to regain composure as Greece calls for referendum and imposes capital controls. Greece calls for referendum on bailout conditions for July 5th. Banks closed for the week and withdrawals are limited. ATM withdrawals are limited to 60 euros per day per account. It's a pretty bad situation. So Cyprus is recommending that the Greek people reject what's being offered to them on July 5th, which creates a stalemate and increases the possibility of fallout from the situation. In other news, China's People's Bank of China again cuts one-year interest rates, surprising the markets. We're seeing extremely high volatility overnight, close to what we saw in 2008. So should be an interesting session here today. Looking at the calendar ahead of us at 8:45 Central. By the way, ECB did not extend its the ECB did not extend its limits for Greece as it's done all week last week. At 8:45 this morning, we have ECB's ABS covered bond and QE purchase announcement. At 9 Central, we're looking for U.S. pending home sales. Looking for 1%. The expectation is 1%. At 9:30, we're looking for U.S. Dallas Fed manufacturing activity at -16. And that's pretty much it for today. The week ahead, tomorrow we get the German jobs report, UK final GDP reading, Eurozone CPI, Canadian GDP, Chicago PMI, and API inventories. Wednesday we have the Bank of Japan's Tenkan report, Chinese, French, German, Eurozone, UK, US manufacturing PMIs, US ADP employment report, construction spending, ISM manufacturing, and the crude oil inventories report from the Department of Energy. On Thursday, we're looking for the ECB announcement, the ECB minutes, and the U.S. non-farm payrolls report. Remember, Friday is a holiday and a shortened session. The market closes at noon on Friday. So non-farm payrolls will be released on Thursday. Factory orders, EIA natural gas, and ECB's Draghi and Merch speaking on Friday. Again, this is a holiday in the U.S. for Independence Day weekend. French, German, Eurozone, UK services PMI, ECB's Lycanen, and Constancio. Let's switch gears here to the technical picture. What we did on Friday. If you recall, 2100 was the key line in the sand outlined during the trader bite that morning. The market needed to get above and hold this area to then test 2102 and then have a chance at 2105, which is an old level, plus it's an HVN from this day here. But the key trade idea for Friday was an open auction in range, the expectation of a test of this 2099, and then expected the market to drop, take out the low, and we're looking for 2080. Let me see what's marked down. Let's see here. I mentioned 2086. I believe it was we're looking for the MCV POC, 2087.75. That's the price target below. And what it ended up doing is, as you can see here, it ended up pushing down into 2086.25, pushing through by 6 ticks. Our target was right here. That was the primary hypothesis. We were looking for chop, a test higher towards 2100, failure, and then a break lower down into this 2087 area, and then from there it's whatever happens is fair game. So Hypo 1 there worked. In fact, Hypo 1 was on target pretty much every day last week. I believe it was one day that Hypo 1 did not play out. So a tougher trade last week, but still the auction is clearly readable in my opinion. And as long as you follow the same process, some days, sometimes the market cycle is in your favor, sometimes it's not. It's just part of the statistics and probabilities that we play with. This morning, we have a large gap down. Overnight, the market gapped lower, opened at 2064. Opened at 2064 and was chopping around. It looked to me like it did these two tests of 2068. So we had a push to 2068 here and another push to 2068.50, but the profile at the time looked very heavy. It looked something like this. And it looked like it was unfinished to the upside. The expectation for me overnight was for it to continue to drive towards the 2086 low, which it has not completed. But this is a fair gap here from the close. We have a 30-point gap from 2095.50 close to 2064. And it's not able to recover all of it. The profile overnight is still shaped like a short covering profile. It does look like it's unfinished on the upside. We're above the mid. Here's the mid right here. We're above the mid, above the open, and we continue to push our point of control higher. To me, this looks like the overnight inventory is clearly short. We're way below. We're way below our close. We're way below our close, and so we still there's still a potential for inventory balancing. The SOC, or the scene of the crime, given that this is a news-driven move, the scene of the crime is 2095.50, the gap. This is the last place the market was on its normal auction before the news disrupted its flow. So we're looking for this level to be tested at some point. Not saying today, but there's a pretty decent possibility that we end up pushing higher. Who knows what the news feed is going to have on it? I don't know what's coming, but expect a lot of chatter. There's a lot of explaining that needs to be done. When we look across the board, we see that there's a fair amount of movement to safety, flight to safety. If we look at the German Bund here, has been sideways for a few days as this negotiating goes back and forth, and it gapped up. But what it's done is it closed the naked point of control and has basically moved down and almost back into the prior range. We see this across the board in Europe. The Euro stocks gapping down and working their way back up. This looks almost like the S&P overnight session. So the hypothesis for this morning is an open auction out of range. I expect it to be choppy, fairly choppy on the open. So I'm looking for, we are down here. If I was to draw out what the expectation is for this morning, I would expect us to open and get some pretty strong intermediate term OTF moves, very compressed. I expect a consolidation, and then my expectation is that there is no further news that unless there is, well, if there is worse news, clearly the market's got the jitters and it's likely to push to 2064, which is 10 points away, and that was the last point of control before it moved up. But the likely scenario is an open auction out of range and a break higher, chop higher to test 2068, and the composite point of control. That's the expectation for this morning. Expect this to be a responsive day. Now, I'm going to remind you again that if we don't get that, that is a huge clue. This is, door number 2 or number 3 on the Monty Hall, Monty Hall puzzle riddle. If we don't get this sort of movement where we're getting responsive buying back into the prior range, that's going to be a very, very important clue, because we're not likely to hang around here very long. We have some pretty decent volume above us. If we look, if we look at the composite here, we have some pretty decent volume. We have really strong acceptance in this area, and essentially right now we are in this next high volume node. We're stuck here. So if we're not able to push through, it's likely to get stuck here. I do not think that the market has another 30-40 points in it or anything like that. I don't believe that it's likely to drop and get that 2055, which is the next key area. 2055 is a big area to test below. I believe that if it does not get responsive, which is hypo 1, it's likely to chop around and keep us here in anticipation of more news. That's the primary hypothesis and the secondary hypothesis for today. Okay. I'm going to leave you with that. There's already a ton of information there. I've gotten several risk alerts from our traders at stage 5 overnight. This is just not a good time to be stubborn. This is not a good time to sit there and wait for a position to come back. You define your risk. You're either right or wrong. You're either in the flow of the market or you're not. It's much better. I know we're stubborn human beings, but it's much better to just cut a trade loose and find the next one than to nurse one back to health. You have no control over market movement. You are just taking guesses on what the probability is of one thing happening over another. And if you're sitting there staking 15-20% of your account on one trade, it makes no sense. So don't do that. I've had to call some people overnight just to help them get out of positions and stuff, but I just hate to see people staking so much into one trade. It's just it's not a sustainable plan in my opinion. Anyway, I'll leave you with that. I'll catch you tomorrow. Good luck today, and talk to you later. Take care.